We've had a decent sell-off on Friday. Meta was down 3%, AMD was down 6%, and many other stocks were down 2, 3, 4, 5%. Gold was down 8.5% in just one day. Bitcoin and Ethereum, they're still pulling back over the weekend. And even there's a joke that Tom Lee is going to flee the country by January 30th because Bitcoin and Ethereum and a lot of those crypto assets have been crashing like never before. And this is all due to the recent pick of the Federal Reserve chairman by the president, which is Kevin Walsh, and it's freaking out the market. I'm going to tell you why. I'm going to tell you why I believe this is a buying opportunity and what kind of assets I'm looking to buy during this pullback. Now, Kevin Walsh is known for being a hawkish person in general. Although he is for cutting interest rates, he wants lower interest rates, which is why President Trump has picked him. But he's against QE, against the monetization of debt or quantitative easing or the expansion of the Fed balance sheet, whatever you want to call it. This is a chart of the S&P 500 versus the Fed's balance sheet. Whenever the Fed's balance sheet expands here in the red, the S&P recovers. It does really, really well. Once it flattens out, we kind of flatten out on the S&P. It goes down. We have some pullbacks, some crashes. We go up. The S&P goes up a lot. The balance sheet contracts. The S&P goes down. There's a very high correlation between the S&P and the Fed balance sheet, especially amongst risk assets, growth stocks. They do really, really well, not just in periods of lower interest rates, but whenever the Fed is expanding the balance sheet. This is extremely bullish for those assets, and the market believes that this is not going to happen this time around. And this is from the Fed chairman himself. He believes that QE has inflated asset prices, increased inequality, and mainly benefited financial markets rather than the real economy. He has described QE as a reverse Robin Hood policy, and this is the guy that we're going to have after May. And 2020, he said the inflation surge was a policy mistake, and it wasn't something due to supply chain or COVID. He believed it was due to the Fed expanding the balance sheet and printing money. This is really, really bad, guys, because the reason why we have had such a massive multiple expansion on the S&P from 2010, 2011 up to 2026 is due to the moral hazard that if something happened, the Fed's going to come in, he's going to save the economy, and due to all the QEs that has entered the system, it has massively inflated the multiple on the S&P, and we had a massive, massive multiple expansion, and that's why the growth stocks did really well, and value investors have suffered during this period. Now, some of the expansion was due to a much higher profit margins. Profit margins have expanded from 9% to 13.5%. This is a decent expansion, but it doesn't warrant an expansion from 12 PE to 23 times earnings, almost as high as the dot-com bubble. So there could be a massive repricing here if the market really believes that we're not going to have any more QE, and it could be really, really ugly. And this is not just for the market in general. This is also for gold and silver. And this is a chart of gold from 2000 to 2025. So this is even before the recent surge in gold. Gold has outperformed the S&P. Gold is the best performing asset of the 21st century, excluding Bitcoin. Why? Because we have printed so much money since the 21st century, since the 2000. And especially here after 2008, you could see the outperformance of gold has reaccelerated. Same thing after 2020, it has massively accelerated. So the reason why I believe gold was going up and the dollar was going down is because the market was believing that the president was making a mistake by appointing someone like Kevin Hassett. So he's going to listen to whatever Trump tells him to do. He said lower interest rate, he's going to lower them. Monetize the balance sheet, he's going to monetize the balance sheet. So they were expecting someone that's dovish during a period of inflation above 3%. And that could be a big policy mistake. And I believe that's why gold was going up and the dollar was going down, because we were pricing in future inflation. Now you have someone that does not want inflation. He doesn't care about Wall Street. He cares about Main Street. And he doesn't like to monetize the debt, so no QE. And he wants to do the right thing. Now, if the market is believing that, that's bad for gold, bad for silver, bad for the growth stocks, bad for Bitcoin, bad for Ethereum. It's bad for any kind of asset that doesn't have massive free cash flow in the near term, and any kind of just assets unprofitable that's just all about the future and not much about the present. Now, it's not just that the market is expensive. I think most of us can agree that the market is relatively overvalued. There are some undervalued stocks. We talked about Meta before and a few others, but most stocks are still relatively elevated. But I'm really combining it with what I believe is extremely bullish sentiment in the market and very high expectations of future returns for investors. It's not just from the fear and greed index, but I'm personally seeing it. I'm logging on X. I'm seeing people making hundreds of percent by buying call options on unprofitable stocks. This year's unprofitable stocks have done amazingly well. And there's many quality companies like Microsoft down 28% on the year, and Meta and many good stocks are down, but all the unprofitables are going up. And I believe that there's really high expectations for those returns. So much that I'm seeing tweets on X of people asking, what is a stock that has a potential of 100x return in the next 3 years? 100x in 3 years. This is not a question that you see at the bottom. Those are questions you see whenever you have euphoria, very high, just massive sentiment. And I'm also getting a lot of questions like, some people are telling me in my portfolio, I own some boring stocks. And they told me the boring stocks you own, maybe they're going to stay flat forever. Maybe they're not going to go up because they don't have an exciting story. So for you to make money in the market, you need to have an exciting story. Again, those kind of lessons, you don't learn them whenever the market's going down like 2022. You learn them whenever the story stocks are doing really, really well. And you feel like you want to FOMO on the next big trend or the next big thing. All those things are signs of massive euphoria. And I'm personally seeing a lot of it. And I'm not calling this a bubble or calling this like a major crash, but I think it would be very healthy for us to have a 8-10% pullback due to the uncertainty, like what Tom Lee said. He said the same thing, and I've been calling for it, and I agree with him. And again, there's some downside on the multiple, so we could go from 22 times to potentially 20 times, 18 times. But I believe this is a dip that should be bought because 56% of Americans are exposed to stocks. There's a lot of crypto investors in the United States, and the midterm elections are coming up. So if the market pulls back over the next few months, I believe that's an amazing opportunity. They need the crypto votes. They need those 56% of investors' votes. Even their kids now have $1,000 account in their names. Everyone pretty much in the United States is exposed to stocks. So they can't really afford to take this market too low for too long. And I believe if we do have a dip, it would be an amazing buying opportunity, and I highly doubt it's going to be more than 10% on the S&P 500. Now, in terms of assets that I'm looking to buy, the first one is, I can't believe I'm saying it because I've never owned this asset before, never believed in it, no talk about it, but it's mainly crypto. And with crypto, again, it has nothing to do with me believing in Bitcoin or whatever, but I like to buy things on bad sentiment. And I'm starting to see a lot of bad sentiment in crypto. A lot of crypto investors are capitulating because gold's going up and Bitcoin's going down. They're praising Peter Schiff that he was right and they were wrong, and they're judging a lot of crypto people. I love that. As a sentiment investor, I love that. I love bad sentiment combined with some kind of a good setup on the fundamentals. So for me, I'm interested in crypto, not right now, but if I see some capitulation, it keeps going lower, it would be a great contrarian bet. And I can't believe I'm saying Bitcoin could be a contrarian bet because last year it was the most hyped up asset ever. But this is the best thing to do, is to buy them when they hate them and sell them when they love them. So I'm looking into a lot of crypto related stocks, mining and other kind of stocks. The second one is drones and military automation. So automation in general is a sector that I'm bullish on for a lot of the industrial applications, because I believe a lot of reshoring is happening to the US and a lot of things are getting automated with Amazon and other factories. But I also believe in military automation in general and the drone defense kind of stuff, especially in this crazy world, geopolitical front. So I see some stocks there that are growing 400-500% in revenues with huge backlogs, and I'm waiting to buy them on bad sentiment. So that's another area I'm looking at. The battery stocks, I mentioned them. They allow those drones, a lot of those robots, humanoids, EVs, cyber cabs, whatever you want to call them, they all operate on batteries. So the battery stocks, I believe, are not too sexy right now, and they're going to be very sexy in the future. And I have some stocks and I'm waiting for my fair value. And the last one is the semiconductors in general. So I'm very excited, and I hope I get my buys on those stocks. And if you'd like to join me and find out when I'm buying something, when I'm selling something, actually everything I do in real time. And this is the link if you're interested. But thank you again for watching. It was not financial advice. Hope you enjoyed it. If you did enjoy it, please press the like button and maybe consider subscribing. So I'll talk to you in another video.